Our guest is ready, and Amey Chalke is joining us. So, my first question to you would be very basic. How do you think has the sector overall performed in the second quarter, taking into consideration the hospital segment, the diagnostics, and the pharma space?
Sure. First of all, thank you for inviting me for this discussion. I guess if you have to talk about from quarter two perspective, I guess all three sectors have done relatively well in terms of market expectation. Especially hospitals and diagnostic both have given good numbers, and this is obviously also to the extent expected because 2Q is generally a seasonally strong quarter for healthcare sector, and because it's driven by the flu season, etc. So however, the numbers have been still we have seen beat across many of the hospital stocks which we covered, and similarly even for stocks like Vijaya Diagnostic in a diagnostic space. So that is there, and also on pharma side we have seen companies reporting very good margins, etc., driven by some very good launches and the ramp up happening on the US side. So even the pharma numbers have been better for 2Q.
Thanks for that, Mr. Amey. This is Varsha. I just wanted to talk about the US generics market outlook. Now, is there any visible improvement with recent lower price erosion that we are seeing?
So at present, what we have gathering through channel checks, through what management commentary during the con calls, etc., the price erosion have been stable to low to mid single digit in the US market for last three to four quarters now. There is no movements on either side at present, but we are carefully watching going ahead. That would be a very important metric to track how these US generic companies perform, especially when the product concentration for most of the companies is at the highest level.
And also, what opportunities do you foresee when it comes to CDMO space with the introduction of US Biocure Act?
So US Biosecure Act directly is only impacting 5 Chinese companies. It is yet to be passed in US. However, it's why expectation as that it will get cleared, and it will impact directly to 5 Chinese companies who are working in cell gene therapy segment. However, people do expect indirect impact on the overall sector for the CDMO space, because there is a fear among some of the innovator companies that this could be expanded to other Chinese companies as well, and this fear is leading to a lot of these innovator companies giving RFQs to our Indian companies, and we are seeing good traction happening in the CDMO space on account of this Biosecure Act coming in.
Right, sir. Now, because you were speaking of CDMO, I'd like to ask you, considering the lumpiness in the CDMO industry and the capacity expansions, how do you think investors should approach CDMO players?
So it's not something which one should strictly monitor quarter on quarter basis, because this is driven by orders which they supply. It could be the orders could be significantly higher in one quarter, and the another quarter could be totally off in terms of quarter on quarter movement. So I think we should see it from a perspective of what kind of technology platform these guys have. That is one. Secondary, that is how big is the research pipeline or research project pipeline for these players. That helps them to reduce the risk of discontinuation of molecule, etc., during the clinical trials. And third one is how many commercial projects are going to come over next 4 to 5 years. These are the three things which investors should be worried about, and which one should track while investing into CDMO companies.
Right. Also, with the government aiming to double this Jan Aushadhi stores, how do you see the increasing penetration of unbranded generics impacting branded generics profitability and growth strategies?
So far, if we track the third-party data which is available through EQE and AIOCD both, let's say 5 years back, this IPM data used to be at around 10-12% for the whole market. Now it has come down to 8 to 10%. And this data represents largely an ethical market which is driven by the prescription branded generic market. So the impact which has come in is believed to be driven by the higher growth or the growing share of generic market, and one of the segment within that is obviously the government led Jan Aushadhi stores.
Right, sir, this is Malika again. I would like to ask you what stood out for you in the second quarter with regards to hospitals.
I guess they've surprised us on the margin front. We were expecting, considering most of the hospitals are in big expansion phase, and generally when you add too many beds at one go, EBITDA margin expansion should be limited, and that was our expectation during the quarter as well. However, most of these hospitals have delivered better than expected EBITDA margins for the quarter, and that has led to a slight improvement in our estimates as well for the coverage.
So, do you foresee this margins to continue to sustain, or maybe the margins can come down?
I believe 3Q that could come off a bit because 3Q is generally a soft quarter for hospital space. But overall, the margin trajectory over next 3 years would be on the higher side for the stocks which would be expanding in high ARPOB cities, which would be expanding into high EBITDA per bed region, which would be improving their case mix. There we do expect EBITDA margin expansion to happen.
Right, sir. Now, because US elections is such a buzz right now, I'd like to ask you, what could be the potential impact of Trump tariffs on the pharma sector?
So see, this is more counterintuitive because manufacturing in US is costly. At the same time, US government is having a burden of healthcare cost. So if they want to reduce the burden of healthcare cost, they have to reduce the healthcare manufacturing cost as well. And the solution is towards China and India only. So very unlikely that they are going to, we don't expect them to put up huge tariffs, at least on the generic companies, because then it will lead to a shortage in US, and that could impact the US citizens only, because the prices of US drugs will go up.
Okay, so just before we ask you the last question, I would like some clarity on what you said just now. You said the solution would be with regards to China. Could you establish that point again?
Because the cost of manufacturing of generic products is significantly lower in both in India and China, and that's why they have to remain dependent for the manufacturing purposes of the generic drugs. Because if they start manufacturing these generic products in US, the manufacturing cost would be significantly higher, and the same drugs can't be sell at similar prices. So solution of lowering the drug prices is by taking products from India and China.
Right, sir. Thank you so much for joining us with that chat, and we really got a great insight to the pharma sector, especially the performance in quarter 2 and more. Thank you.